What is up, guys? Zinube here at Elier Forex, back again with the banger. So, today I'm going to be discussing market manipulation. What is manipulation, or market manipulation to be exact? These are areas, points, or zones where we would generally find a whole lot of liquidity brought in by retail traders, which the market makers take advantage of in order for them to book a profit. So, next question: how do we identify market manipulation? Good question. And this is how you're going to do it. So, I'm going to talk to you guys about whole numbers, which are part of a series called the quarters theory, right? Now, I'm going to put in a couple of lines on my screen in a little bit, and I want you to notice how these lines will generally look as though we use support and resistance to draw in these lines. So here goes nothing. Right, so first line, I'm going to put it in at the very top, which will be at 1.39, and let's make it red. The reason why I choose red is a whole number for me is a very important zone. So it's an extreme zone for me. That's why I would use red, right? So I'm going to put in a couple more, maybe about 4 or 5 more lines. And notice where I'm putting them all at, right? 1.39, 1.38. Can you guess where the next one will be? Exactly, 1.37. So the reason why I'm putting them at these very points is, if you notice, these numbers here that I've put have only 2 digits after the decimal point and are basically whole numbers: 1.3900, 1.3800, 1.3700, and so forth. I'll put in just a couple more, and we're going to go on to the next aspect of identifying manipulation zones. Now, market makers, if you do not know who or what market makers are, these are the people or organizations that move or control price. Yes, traders do have the ability to control price if there is a huge number of them placing trades all at the same time, but market makers now use the whole aspect of having a whole lot of people placing trades and so forth. They use that to their advantage to what? To manipulate the price, therefore tricking. Yes, I use the term tricking because that is what happens on a daily basis. The market makers trick retail traders, which are you and I, into trading in the wrong direction so they can book a profit, right? So guys, this is a psychological game, right? It's all about psychology, knowing how the majority are trading so that the few can trade the right way. So if you know stats very well, you will know that at this day and age, 98% of retail traders lose money on the Forex market, which leaves a staggering or a very small 2% of people making money. Now, are you fortunate enough to be part of that 2%? Hopefully, after what I'm about to show you will be, if you were not already, right? So now I chose blue at a certain level. Now you will notice that at the point that I'm putting this at is 1.385. That is exactly halfway between 1.38 and 1.39. So 1.385 is exactly halfway in between those 2 points. I'm going to put in a couple more. 1.375, halfway in between 1.36 and 1.37. And let's go 1.365 for this one. Right, and then I'm just going to put maybe one more, 1.355. Right, now market makers generally manipulate around whole numbers. Now I want you guys to notice how the lines that I've drawn are almost as if they were drawn using support and resistance, but you guys just saw me using simply numbers, just numbers. Numbers are what have caused all of this right here. So all these circles that I've drawn here, you can see that the market was bouncing on these lines, which further proves my theory that numbers are what market makers sometimes use in order for them to decide where the market is going to go. Now, if you do not know anything about whole numbers, there is a book called Quarters Theory by Ilya Yotov, which will explain in depth the the whole numbers, or the halfway points, or also quarter points. Quarter points will basically be, for example, if we're starting at 1.34, a quarter point will be 1.3425, and then the halfway point will be 1.345, and then the next quarter point will be at 1.3475, and then finally the whole number will be at 1.35. So in between 2 points, you're going to have 4 quarters, which make up a whole, right? So 25, 50, 75, 100 quarter points, right? Now, market makers use whole numbers because they are easily disguised within the chart. Now, we simply think that this is just price and the market has nothing to do with all these prices. The market has everything to do with price. It's not just for us to identify the exchange rate of money between, for example, here the dollar and the pound. It's not just to identify that, but the market makers will use whole numbers in order for them to manipulate and book a profit. That's what they're here for, to make money, as you and I are as well. Okay, so when market makers bounce at whole numbers, you will notice that there's normally a whole lot of momentum away from those values. It's not going to be every time, but if it is an area of interest, there's going to be a lot of momentum moving away from that zone. And this is where we assume that there is news or fundamentals. Let me say it as fundamentals. This is where we would naturally assume that there's a whole lot of fundamentals, and this is just something that's happening in the market. But know this, market makers also use fundamentals to disguise their movements. So whenever there's news, I want you to wise up and think, what could the market makers probably be doing at this very point? So you want to understand why they're moving in a certain direction and where they're going to. That is the essence and the basis of trading. So when you look at this chart, we have what we call a downtrend, right? Let me just remove these arrows quickly so that we have a clean chart, right? Now, what we have here is a downtrend, a downtrending market. Of course, the market was broken over there and people would generally start to buy, right? But we are in a major or a macro downtrend, right? And then you would ask me, but what about this uptrend that is forming here? I would like to identify this as a micro uptrend. The only time I will consider this market to be completely going in an uptrend is after we break this higher high. Remember, in a downtrend, we have higher lows and lower lows, right? And in an uptrend, we have higher highs and lower highs, okay? So at this point, looking at this is our higher high. We had a lower high here, and eventually we just reached this lower highs peak, right? Now, this is an area of indecision now. Is the market going to break above or is it going to go back down? What we want to see here is a whole lot of manipulation being thrown at this area right here, of which you can already see we had a couple of rejections earlier today in that area. And I will admit my group and I were in a couple of shorts. Now I'll explain why we had those shorts in there. Now, there's a bunch of candlestick formations that we look out for in order for us to know in which direction the market is going to. And I know a lot of people will have a question as to why didn't the market push down from the whole number and why did it utilize the halfway point? Now, there are levels to a movement, and in this case, the level at which the market reached 1.37 was not the maximum at which the market could start to go down at. But further looking at 1.375, we noticed that this could be a potential setup for a downward push. So there's a bunch of stuff that we look for in order for us to tell whether the market is still going to go up or is it going to go down. And I'm not going to go into that today, but that will be there is going to be another video basically in order for you to learn and understand what we look for. So after we got the confirmations from candlesticks, the confirmation that we normally look for, we decided to jump into shorts, and we did manage to get 30 pips off of that move. Unfortunately, we were aiming for more, but the market didn't give us more. But 30 pips is more than enough for a day's trade or a day's movement, right? So we had our M structure right on that halfway point, 1.375. And I want you to see just what the market makers did, just moving away from that halfway point, which would further prove my theory that this was a level of manipulation from the market makers. First identification would be this large red candlestick breaking back below underneath 1.375. And then I want you to look at the next red candlestick below 1.375, profusely moving away from that level, which generally tells you that they don't want this market to continue going up or to close above 1.375. Yes, they did previously, but we can call that a false break. Now, if you recall, this area also is at the peak of the previous lower high of the downtrend. So this is a very important area, and the market makers are generally going to manipulate a whole lot in this area. So what are we looking for? We are looking for a push to the downside. So we're in a micro uptrend channel, right? So this is the peak of that channel, and this will be the maximum low point to that channel according to how we've drawn in the trend line, right? So our expectation is that we may see more manipulation towards this area and then eventually going down to this zone. But our first TP would be at 1.37, as that is a whole number. That should give us a more or less 28 pips according to the current market, which is at 1.3728. So down to 1.37 is 28 pips. And our TP2 would be the channel, but I don't use trend lines as a form of TP. I use zones. So the next zone for me would definitely be 1.365, which will give us, give or take, 78 pips from the current market. We entered halfway past this candle, and we did manage to close 30 pips right at that wick right over there on that candlestick. We did have about 30 pips on that one. We are currently looking at breaking below this previous peak, because if we do not break below it, then that could act as an area of support. But at this point, I am confident in assuming that this market should be going down. But do not take sells based on that alone. You have to have more than one confirmation in order for you to take a trade. I personally like to have at least 3 to 4, maximum 6 confirmations. I mean, you can have unlimited confirmations, but I would like to have anything above 4 confirmations in order for me to consider taking a trade. Now, also, if you look at this, we have a trend line which we can draw from the very top to right around here. Let's just put in a nice channel over there. So at this point, we could have a break to the upside, and this market could continue, right? Continue going up. Or what we can have is a retest, a break below, because I don't have a convincing break below that area of current support. It's currently support at this point, but we haven't had a convincing break below, and we need a retest, then coming all the way down. So where is the safest place to take the trade? After the break and retest, right? As you can see, in both scenarios, we have a break and a retest and a continuation. So at this point, we are also expecting what? A break, retest, and a run to the downside. So my next target will be 1.365. That is what I'm currently hoping for. But hope is not enough to win in the Forex game. You have to analyze critically. Spend as much time as you can in analysis. Draw up as many scenarios as possible, and you will take the best one out of all of them. So at this point, looking at the macro downtrend Then looking at this micro uptrend, I call this an induction trend, inducing people to buy. It is currently going up, yes, but I believe people are being induced to buy and to load up the buys, hoping that this market will continue to the upside. And yes, I know we have a relatively weak dollar at this moment, but that does not mean we will not have potential to take shorts on the pound, which inadvertently means buying the dollar. So at this point, we can see some momentary bullishness on the dollar going to that 1.365 and potentially breaking all the lower lows as well, continuing the downtrend till we reach a maximum peak formation low that will then give us direction for a bullish bias. So for the time being, I'm still expecting GBP USD to be bearish, but please do not take this as trading advice, as this could result in a loss. But trade safely, trade wisely at your own discretion. So until we meet again, guys, peace out, stay safe. If you enjoyed the content of this video, please remember to like, subscribe, hit that notification button so you won't miss out on anything to be shared in the future. And remember, keep on sharing this channel so that everybody can be well informed on the market.